It's time to create your investing strategy, or maybe you need to make changes based on what you've learned in the last year that promote your own financial health and pave the path to prosperity. Quick review. At the start of this year, I set a goal to increase my projected annual dividend income by $2,000, which would have put me at $3,500 for the year. But by September, I had hit the goal, so I had to raise the bar. The next year will bring about a slight shift in strategy, with a focus on growing the overall value of the portfolio as well as continuing to grow the projected annual dividend income. I'm keeping it simple with a 4-tiered strategy that might work for you as well. Step 1 is continued debt-free living, which is now a way of life for me. But I wasn't always debt-free. I had amassed well over $100,000 in consumer debt, and I had a mortgage on top of it. I was absolutely drowning, you guys. So I'm proof that you can rid yourself of the debt, because in March of this year, not only was I free of all the consumer debt, but I had made the final payment on my house and I got to skip across the front lawn. Talk about a joyful moment. Now, I know that not everybody thinks paying off their mortgage makes sense, but it is personal finance, and being debt-free means a lot to me. It means more freedom to live my best life. I can save more and invest more, which brings me a greater sense of security. So just a side note, if you do have debt, it can be overwhelming. And I know how it feels, but remember, you're never stuck. If something isn't working for you, make changes, propel yourself forward on your path to prosperity, whatever that looks like. If I can do it, so can you. Okay, back to the strategy. Step 2 is consistency. And in my mind, that applies to 3 things: consistent portfolio additions, consistent amounts invested, and consistency with the criteria you have chosen to select your holdings and continue to house them in your portfolio. So let's first talk about consistent additions. Pick a day of the week, or once every other week, or monthly, or quarterly, whatever it is that you can do, but mark the day or days on your calendar and stick to it. I invest every Monday when the market opens. It's routine for me. And in addition, I have a small automatic deposit that hits my M1 account every single day. I set it up once, decided on the allocations in my M1 Pi, and then I can focus my time on other things, like playing with my dogs, making videos, and writing, both of which I really love. I also want to invite you to join me for Prosperity 52, where we commit to making weekly additions to our portfolios. That's the 52 part. So come find me on Twitter, or X, or whatever we call it now, and then we can chat about what we're buying each week. Or check out the Prosperity newsletter. It's so much more fun if we can root each other on and share our successes. I'll link them in the comments below. The second part of consistency is the amount that you invest. If you have a 401k, are you investing to get the match from your employer? This is one of the easiest ways to automate your investing. Are you maxing out your Roth IRA? Set it up. Consistent amounts, for me, means monthly contributions of $2,000. Remember, I just paid off my mortgage and I have no debt, so the amount that I can invest each month has grown considerably. So this means funding Roth IRAs and maintaining those daily contributions to my M1 account. I believe that we're most successful when we automate our investing. So if you haven't already, review your budget, determine what you can invest, and then automate it. The third part of consistency is with the metrics that we use to add or to review our portfolios. My goal is to be a buy and hold investor, but that doesn't mean I'm going to hold on to something that no longer meets my investing criteria or strategy, which brings us to step number 3. If you already have an investment portfolio, step number 3 is for you. Or if you're just getting started, step number 3 is going to help you to develop your criteria for investing. I just did a video where I shared all the metrics I use in detail and applied them to my own portfolio, which allows me to determine which holdings I need to keep a closer eye on. I'll link it if you want more information, but the big rocks to look at before buying shares, and in no particular order, are the dividend streak. How long have they been paying that dividend? Payout ratio, dividend growth rate, total return, revenue growth, free cash flow, the dividend yield, the PE ratio, and the beta. Don't forget about the current ratio and the debt to equity. Of all of the metrics we just listed, you need to decide the parameters that work for you based on the risk you're willing to take and how much time you have until you need to live off of or supplement your income with dividends. I think it's important to create that framework that you're comfortable with, because it's going to allow you to be more successful in step number 4, which we're going to get to in just a moment. So here are some of the benchmarks that I'm using in the year ahead. A payout ratio of 60% or less. The exception to this is any real estate investment trusts or BDCs that I have in my portfolio. Debt to equity less than 1.5. A 5-year dividend growth rate that is greater than 10%. And truthfully, right now I have a handful that fall under that benchmark. And I would love to have companies in my portfolio that have a greater return than the overall market. The final step, and maybe one of the most important, is to strip the emotion. If we look at the last year, you guys, it's been a wild ride, but I never wavered from my plan. So in the year ahead, I'll continue to add more of my favorite stocks on red days and enjoy the capital appreciation on green days. And I'm going to keep my M1 automatic investing rolling along. And if you haven't read The Psychology of Money, it's definitely worth the read. Check it out. For me, the year ahead is going to be about milestones. I fully intend to grow my projected annual dividend income to $6,000 a year. So that'll average me $500 a month in dividend income. I intend to exceed the $100,000 mark in my overall portfolio value. I'm going to increase my core holding of SCHD to 400 shares, and I'm going to grow my newest position in SCHG because in addition to income, I'd like to see more growth in my portfolio. So what portfolio milestones are within your reach? What are your goals? I'd love it if you'd join me on the path to prosperity and check out Prosperity 52. And then go and take a peek at this video next.